Talk more about the tentative debt ceiling deal and why you shouldn't give up on investing because of this debt ceiling is Brent Wilsey of Wilsey Asset Management. Good morning, Brent.
Good morning.
It seems like we have this conversation and this situation every year.
And we do. Since 1960, I think it's happened about 60 times. So, I mean, it happens almost every year. And again, it's going to happen again based on this 2 years from now once again. So it does keep happening. And I said I'm 100% sure before that, yes, they will pass this. There'll be something that'll happen. Yes, we're in that direction. But the thing that people don't realize is that it gets very frightening, and they always bring out the negative side. One thing I looked at, like when you have yourself personally, you have credit card debt, we'll say, and you don't have this, but I'm telling you, you have credit card debt of $100,000. Your income's $100,000. Oh my gosh, you're in a difficult situation. If your income raises to $110,000 and the debt raises to $105,000, you're in a better situation. The same thing is happening with the government. Back about 2 years ago in 2020, the debt to GDP, and GDP is the government's income. That's gross domestic product. The debt to GDP ratio is about 132%. As of today, well, most recent report, it's 120%. So the income is increasing, the debt is decreasing slowly. Now, this is not going to change over, tomorrow, but over time. I've always said this: if we can get our GDP to go higher and the debt to stay the same, which we're trying to do for this year, we'll be in a better position. Keep in mind, Japan at one point, they had a debt to GDP of 190%. The government doesn't close down because of that. As long as you can pay your bills, going back to your situation with the credit card, not that you had the situation, let me make that clear, that you can pay the bills, you're okay. And that's what the government continues to do. So we'll be okay here. What the concern was that I was worried about was then talk about, oh, they could lower the rating on the debt. Well, that would cause problems because then interest rates on debt would go up dramatically. That could have problems. So I'm glad to hear that they've come together, that they're working through the long weekend, that they got a deal, and I'm hopeful that the Senate and the House will agree and pass this.
Every now and then on a news channel, you'll see they'll throw up the debt clock, they call it, and it's just ticking.
Right.
10,000, 100,000, I don't even know, because it's like $3 trillion or something.
One of the debt's over $30 trillion.
$30 trillion.
And that sounds like like a big number, but keep in mind that the GDP, again, our income for the country is about 28 trillion. So that's what I'm saying. If we raise our income, the trillion sounds like a lot of money, but a number means nothing at all unless you have something to compare it to.
Got it.
So when you put everything in perspective, okay, it's not that bad.
So as a country, we're a little bit in the hole, but it's not all that bad.
I wish it was a bit lower. And we can never wipe it out completely because we need that debt, because you need people that need to, and insurance companies and so forth, that need that guaranteed income from the government to make those payments. So we need that debt. You can't get rid of it completely. It's tangled web, isn't it?
Trying to get my head around all of this. Okay, so let's talk about this news that State Farm Insurance, is it State Farm or?
Well, State Farm, yeah. And actually Progressive, Geico has closed all their offices in California. Allstate has stopped writing commercial insurance. So they're really having problems because the way insurance works, let me tell you how an insurance company works. They collect premiums, they invest that money, and they make profits on it. That's how they're in business. They got to make profits to stay in business. So with those premiums, they have reserves of billions of dollars. Now, they've had trouble because rates have come down. Insurance companies invest most of their money into bonds and some real estate. So when rates came down, that hurt them. On the other side, they have the expenses. They got to pay all these claims. So we've had droughts, we've had floods, we've had all these things. Fires, yeah, I forgot about the fires, thank you. So the expenses are going up. And the other problem too is you have all these litigation from all these injury attorneys. There's one that bothers me, it's Barnes, the Barnes Group. They're from New York City. The guy's not even licensed in California. He has other people doing it, that they're going after the insurance companies. I think it was last year, Allstate said they spent $10 billion on litigation. Wow. It is not free money. That comes from you and I paying higher premiums. So the insurance companies are in a situation to where, and by the way, Sacramento says you can only charge this amount. So they give them limits. So if you're capping what they can make and the expenses are going up, they say, we can't make money in California.
Right.
We're not going to write business here any longer. And the problem that I also saw that in the homeowners, there's a thing, if you can't get homeowners insurance, it's called FAIR, which stands for, Fair Access to Insurance Requirements. You can get insurance through them. But it's not great insurance. It doesn't cover liability, doesn't cover medical, doesn't cost loss of rent and so forth. So it's not a great deal. It's expensive, and also it limits at $3 million. Though there's houses in San Diego that are more than $3 million.
Right.
I don't know what they're going to do. It's going to cause problems with the real estate market, because if you can't get insurance for that home or for that rental, you have a problem. I mean, the government, they try to protect the consumer, but sometimes you have to let business do what they need to do.
Right.
And it's not the big bad business guy like, oh, these corporations make so much money. No, they have to make a reasonable profit.
Sure.
And if they can't, they're going to say, sorry, we're going to close our doors.
All right, any seminars coming up?
No, actually, no seminars coming up. Gosh, I think the next one's going to be in, July probably.
Oh, okay.
Well, actually, it'll be here before you know it, I guess.
Yeah. It's ticking by fast. All right, Brent Wilsey, Wilsey Asset Management. Thanks for breaking it down for us.
You're welcome.